Welcome back. You're with us here on Street Smart, and we're in conversation now with our Sreesankar, Head of Institutional Equities at Prabhudas, Lilladher. Sri, good morning. Great chatting with you as always. Let's just start off with what we're tracking today in trade, Sri, because we're heading into policy, and usually we don't really see too much movement ahead of that. This time around, we're also, of course, saying that markets have factored it in. Would you agree, or are you still a little cautious ahead of that policy? You never know with Governor Rajan and what might come out of it.
Yeah, I think it's not very good to speculate on what the governor does. But my own expectations are you're not going to see any kind of a rate cut or anything. And I think there are far too many variables which is still very, very uncomfortable. I think the strength of that strength in inflation has been pretty strong. And I think at every point of time in the policy statements that comes much more clearer. The good part though is the way crude has been moving down, and that has probably put taken away some pressure off the huge current account deficit that you should have seen otherwise, and that's a good news. But I don't think that anything is going to change, and probably it's going to be more of a status quo.
All right, Shri, do stay with us. Let's take a very quick break. We come back and track the pre-open as well in just a moment. We'll be right back.
आसान यहाँ निवेश उद्योग मित्र मध्य प्रदेश
ग्लोबल इन्वेस्टर समिट में आइए आपका हार्दिक स्वागत है
The world of ABN AMRO Private Banking, where you will find award-winning teams of experienced professionals who work hard to offer you the best possible insights to deliver the tailored advice you expect and deserve. Constantly reinventing ourselves, our clients' wealth strategy is future-proof and has been for centuries. Is yours? Find out more at abnamroprivatebanking.asia.
All right, welcome back. We're in conversation with our Sreesankar this morning, just ahead of pre-open. Just got a couple of minutes to go at this point of time. A couple of stocks in news this morning, Sri. Just want to run you through them and get your thoughts on them. IDFC, of course, has signed a pact with Blackstone to sell about 100% stake in 2 units. IDFC is one that hasn't really been catching our eye lately, but it did see a bit of a run-up earlier this year. How's it looking at the moment?
See, again, IDFC is how the bank is going to shape up, how the entire infra portfolio is going to shape up. There are a lot number of questions that needs to get answered. So I think it will probably move in line with all these things which is happening around. I.e., see, for all practical purpose, you have seen that the coal block cancellation, what has happened. What is its impact going to be on the portfolio of IDFC? Yeah, there's a lot of questions will get raised because there is exposure, there will be exposures to many of the stocks, be it in the power space, etc., which is going to be dependent upon some of these things and how it is going to shape up. So I think it's not going to be very easy ride in terms of the portfolios of many of these financial services companies. That includes banks as well.
In fact, let me take that conversation a bit further when it comes to the banks. A lot of speculation today as well as to with regards to whether or not the RBI does anything, whether or not banks now going forward will also move on lending rates and so forth. We've seen a lot of pressure on the assets, of course, when it comes to particularly the public sector banks. What would you be doing with some of those stocks at the moment? See, the way to look at it and play from my point of view is that if I am optimistic on the economy should, and our view has been that you should start to see towards the end of the third quarter in FY15 that you should start the economy to move along.
Now, if you start seeing that, probably from the fourth quarter onwards, you should see a credit pickup happening around. Now, look at what's happening in the credit growth. Credit growth is at 10%, sub 10%. It's at a very low number when compared to what has been there in the past few years. So that's not giving you comfort. That's number one. When the credit growth happens, when the economy starts to grow, financials should do well. Growth also should be there. That's where you're going to see a growth happening. Sorry, earnings happening. Point number one. Point number two. Now, look at again what happens to the entire banking space. Questions like what happens to the banks who have got exposure to various coal mining companies, or for that matter, power companies, and so on and so forth. Now, how this entire portfolio assets are going to get, is it going to be performing, or is it going to have problems or becoming NPAs at a later point of time? If that's the case, what will happen to the NPA portfolio of the banks? Which means that provisions are going to be higher, the risk-weighted assets are going to increase, and a whole lot of things, which means their capital requirement also will increase quite dramatically. Otherwise, unless they, whatever they resort to, whether they sell their NPAs and so on and so forth, sell down their NPAs to ARCs and so on and so forth. So now, you have to view these things the way it comes. We know how we estimate our economic growth expectations is high, so financials is the ultimate, the place where I should be. Now, you need to look at the risk of being in financials. All these news flow which happen will impact the valuations of financials, and financials will correct. So you probably would have seen the stocks move up, and when news flow like this starts to happen, it starts to correct. So you need to look at valuations for these banks individually, at what level you are comfortable, then you need to buy back.
All right, Sri, just hold that thought. Let's also get the opening calls on the currency. Still weak, Anu, this morning.
Well, it's sulking a little bit, but you see a very narrow range before 11 o'clock. That's what money market men are telling us, because they're going to be very skeptical of taking a position. Because look at what's happened. We've seen such a big fall. Dollar overnight has been very quiet. We saw a drop in the early trade, but going ahead, we saw the fact that the dollar is actually still at that 85.60 mark. It's going to be critical of how he mentions the currency today at 11 o'clock, and if he does actually make a mention of the unstoppable dollar rally that we've seen, a 7% rise. But as David, the market guru, was also mentioning to us earlier, a 7% rise for the rupee year to date is something to take cognizance of, and we shouldn't be getting a little too worried about these small dips here and there.
All right, let's also go across to Saloni, who's joining us from the RBI headquarters. Saloni, the Bloomberg poll suggesting the governor is unlikely to cut rates this morning. What's the buzz that you're picking up?
Well, Abha, clearly, let's begin with, like you mentioned, the Bloomberg poll. Now, 52 economists surveyed. Are the majority of them, the unanimous call is that there will be no change as far as the key rates are concerned. But there are 3-4 things to watch out for per se with regard to the commentary that will come from RBI Governor Raghuram Rajan. First one will be inflation. Of course, this time they are also going to release an inflation report. We will try to figure out what sort of commentary RBI is trying to give in terms of what will happen to inflation post January of 2015. As far as CPI is concerned, the last number was at 7.8%. Core inflation was at 6.9%. So he must be drawing some comfort from CPI cooling off. Food inflation pass-through still remains a concern. WPI has been at a 5-year low, though we are seeing no recovery or green shoots as far as growth is concerned. A lot of economists had expected some sort of bumpy recovery in growth, so we are not seeing that on the ground so far. As far as what bankers are expecting, 2 things to watch out for, where of course will be the SLR cut. Remember, he's cut the SLR before twice as well. So that is the amount of money that banks have to invest in government securities. So there is some expectation of that because liquidity norms kick in by January of 2015. Also, largely on the fact that there might be some, concession on the daily CRR limit. That's the amount of money that banks have to keep with RBI overnight. So these are what the bankers are expecting. But as far as the key policy rate is concerned, unanimous call saying there'll be no change yet again.
All right, 11 o'clock, that's the date with Raghuram Rajan, and a room full of people looking forward to 11:10. He'll address the media. Partha Bhattacharya on the phone line with us to give us insight on the ever-weakening currency right now. Partha, good morning. Is it getting a little concerning, the dizzying dollar rally that we've seen?
Good morning. See, I mean, let me talk about this RBI. You have been talking about Raghunath Rajan's resolve to break the back of inflation, etc. Yeah. There are a lot of arguments to question whether monetary policy can at all contain food inflation, or food inflation is a clever way to transfer purchasing power from urban to rural area. If fuel inflation which is a byproduct of international price and exchange rate, can at all be influenced by monetary policy, etc. This debate I am leaving apart. One very important concern which I think is not being talked about is Raghunath Rajan would be also concerned about reducing the interest rate when Fed QE program gets over in 30 days time and the possibility of US interest rate hike looms large going forward. So any reduction in US interest rate, domestic interest rate in India may also add to the risk of outflow. So that's one factor also would be bothering RBI mind today. So anyway, I don't think anybody is expecting any interest rate cut this time. And although all factors are positive, S&P negative to stable, etc., all this CAD down, fiscal deficit hopefully will be down, and borrowing is less by 8,000 crores. All these factors are positive for a good platform for Raghunath Rajan to go ahead and cut the rate. But this concern would remain. If you cut interest rates when US interest rate likely to be hiked, will have some impact on the forex outflow. FII outflow is a possibility. That concern would be there. On the global front, what is happening in the last 2 days, I mean, DXY, US DXY is very, very high, 85.4 or so, I think. Now we're touching 86. That's, and the geopolitical risk, whether it's Hong Kong, Ukraine, Russia, Brazil, or Iraq, all these factors are putting the dollar as dollar upward pressure is there on dollar. So that's getting reflected on rupee. I think the volatility has gone up to by about 20 BP or so. 1 month volatility, implied vol has gone up a little bit. Volatility will remain, but again, I think around 60 or 90 or so, it should be capped. RBI will come in. RBI will not allow rupee to depreciate in a very fast or very volatile manner. Yesterday, of course, it was very volatile. Intraday volatility may be there, but it would remain in a range bound, I think, in the medium term.
All right, Partha, thanks for that. The yield as well at 8.5 on the 10-year, starting to indicate that there will be concern. And an important point coming in, Abha, from what Partha was saying, that he may not mention it in this release or sort of his opening remarks, but do you really want to let your guard down at a time where you don't know what the Fed is going to do next over the next 6 months? And that's going to weigh heavy on Mint Street.
All right, so Fed and the dollar continue to be the big focal point as well. All right, moving our attention away from that, Sri, I want to also get your quick call from you on OMCs. We've got news that diesel prices may be cut going ahead. We've got those crude prices that are trading at low levels since 2012. What's your call on the oil and gas pack at the moment?
I think OMCs are going to be purely a function of how the entire international crude prices function. If the crude prices continue to remain low and you're not going to have losses coming from diesel, etc., yes, then the valuations of those stocks will continue to remain at a good level, because we need to bear in mind that we will have these subsidies for SKOs, that's kerosene and LPG, continuing to be there for a fair amount of time. So you're going to have the subsidies unless they go to the cash levels, etc. So good time for OMCs, and that's purely if it is already discounted in the price. Now, if crude moves up sharply, will there be corresponding increase in diesel so that to offset for the losses, or will it be only back to the 50 paise? Then the subsidies of the OMCs will increase. So I think it's going to be a function of how the crude moves and the way diesel happens in the domestic market.
All right, Sri, thanks so much for joining us this morning. Great chatting with you. In the pre-open, we've just got a marginal downtick coming in. We've got stocks like a BHEL and Ultratech on the lower side. On the